皆様お待たせいたしました。次のセッションはビットコインイールドと新しいレンディング市場の可能性をお届けいたします。Thank you all for waiting. Our next session is titled Bitcoin Yield and the Emerging Lending Market Landscape. 早速皆様をご紹介いたしましょう。Our guest panelists are Gabe Hiroto Parker from Citrea, Jesse Shrader from Amboss Technologies, and Fisher Yu from Babylon. The moderator is Kishin Kato from Japan Bitcoin Industry. 拍手でお迎えください。Please come to the stage. A round of applause, please.
All right. Thanks for showing up to this panel. It's a panel on Bitcoin yield generation, I guess. We have 3 guests today, each with projects that approach Bitcoin yield independently in very different ways. So today, I think we will start by having each project introduce themselves. Give us a very high-level overview of what they do. I guess starting with you, Gabe.
Yeah, my name is Gabe Parker. I do business development at Citrea. Citrea is the first CK rollup on Bitcoin, actually secured by Bitcoin. All data is posted on Bitcoin L1. Specifically as the BD side, I work on all the infrastructure partnerships, the ecosystem, app development. Bitcoin yield is a big focus of mine as well because we are a Bitcoin chain, right? BTC is the main asset, and we want to create more value and use cases for it.
All right. Just one question. I guess Citrea is not mainnet yet?
No, so we're testnet now. Mainnet is going to be mid-October.
Okay, thank you. All right, Jesse.
And I'm Jesse Shrader, CEO and co-founder of Amboss Technologies. And for the most part, we work on the Lightning Network, which is Bitcoin's payment layer. And overall, Amboss provides operational support and optimizations. And we recently launched a product called Rails, which is a self-custody way to earn yield on Bitcoin or access yield from Bitcoin's native payment network.
Do you want to give like a 30-second explanation of what Lightning is? Because I feel like a lot of people at this conference don't really know.
Sure. So Lightning Network is a very rapid way to pay with Bitcoin. It uses connections between nodes, which are often called Lightning channels. And the Diamond Hands community, like here in Japan, has really taken that and run with it. And it allows you to do instant payments, very low cost, anywhere in the world, using Bitcoin as a payment system. And it's kind of often called a layer 2 because it uses the Bitcoin protocol as kind of the court to actually manage the relationship between the different participants in the Lightning Network.
I think that's a good explanation. All right, Fisher.
Hello everyone, my name is Fisher Yu. I'm the co-founder of the Babylon project and CTO of Babylon Labs. So at Babylon, our mission is to build a Bitcoin-charged crypto economy, and our approach is to make Bitcoin productive in a trustless way. Our flagship protocol, known as Babylon Bitcoin Staking, allows Bitcoin holders to provide proof-of-stake security to other blockchain networks and earn yield directly. And currently, it has over $6 billion of Bitcoin TVL. And recently, we invented a trustless Bitcoin Vault protocol, which will allow Bitcoin to participate in any smart contract DeFi on any blockchain and roll-up networks. So we'll allow Bitcoin to earn yield in many more ways. Thank you.
So $6 billion in Bitcoin, that's crazy. All right, so a lot of the conversation about generating yield with Bitcoin is, about how much can we earn, but a lot of the times we kind of gloss over how that money is being earned, right? What value is being created that's being distributed to the stakers or the node operators or, I guess, LPs. Could you each touch on like what you envision your product like how do you earn on, like what is the source of the funds that people would earn through your product, Gabe?
Yeah, so I mean, so Citrea, it's a chain, right? So as a result, like there would be multiple different types of Bitcoin DeFi applications that are giving yield, and where the source is coming from, I think, in my opinion, a lot of this source is actually off-chain. So, you know, with more like traditional finance type structures being implemented in like Bitcoin itself, like options, right? Options markets are all-time high now. You have TradFi trading them too. I think, you know, a lot of this yield comes from these types of interactions. Like one example I like to give is like just simple like selling options on your Bitcoin, right? Where does the yield come from? It's very simple. There's a buyer who's paying a premium for that option, right? And another one I think is more like private institutional lending. I think like, you know, that's pretty obvious. You know, you have a borrower that you can, you know, tell people who they are, and the yield is coming from them wanting to actually borrow the Bitcoin to maybe use it as collateral and do DeFi with. So I think in its simplest form, like the yield's coming from like these couple things, like Bitcoin-backed lending and more like off-chain TradFi stuff. So yeah, if that answers the question.
Okay, so basically the idea is that you would earn yield on your Bitcoin by entering like financial contracts, such as lending in.
I think that's a great, yeah, it's the simplest way for now. I know staking was something very popular and a great innovation that has happened in the past couple of years through Babylon, right? But the most important thing is the number, right? Like every Bitcoiner has a hurdle rate, and that hurdle rate is around like 3% or so. So like that's what it takes for a Bitcoiner to actually go take a risk and deposit their Bitcoin. Because personally, like for me, if I'm not getting like over 1%, there's no point in me, right? Like doing some strategy on chain, in my opinion.
I see. Thanks. And so with Lightning routing, like what's the source of the income?
There's two sources. One is payment routing. So if you like imagine a plate of food being passed along a long table, each person that passes that food would be able to take a small bite. The same thing is happening with a payment. A payment would initiate, and as it is passed, you know, through the network, through a series of connections, each person gets a little fraction of a Bitcoin, a couple of Satoshis from actually routing that payment. And then there's a second source, which is called, you know, liquidity leasing. And you can think of that like connecting a new person or welcoming a new person to the table. And that allows them to get paid, be the end recipient of this, you know, plate of food or a Bitcoin payment. So those are the two sources, and we run a liquidity marketplace so that anyone can get connected and start receiving Bitcoin payments over the Lightning Network.
And what's the like typical APY that you would earn doing this?
So speaking in historical terms, generally the payment routing earns less than 1%. But liquidity leasing, what we've seen historically is 1 to 4% APY. So on an annual basis, people are earning up to 4%.
Okay. And with you, Fisher?
Yeah, so the yield source, I think, come from three parts. One is the work you do. Second is the risk you take. And third is the arbitrage opportunities you have. Okay. For example, for Bitcoin staking, you take the Bitcoin when it's staked, take the slashing risk to protect other chains, so you can earn rewards for the risk it takes. Okay. And also, it's kind of a work you put there. And then in terms of arbitrage, for example, if you use Bitcoin for lend to borrow stable, then if you have other opportunities where you can invest the stable you borrow with higher yield, which is higher than the interest rate you pay, then you have the arbitrage there to earn yield. Yeah. So work, a risk, and arbitrage opportunity.
And with Babylon, do you think the majority would be in staking, or do you think the majority would be in the arbitrage or DeFi stuff?
Yeah, so for now, all our TVL is staking, which is kind of like passive yield for Bitcoin holders. With the launch of our trustless Bitcoin Vault protocol, we hopefully will convert this passive Bitcoin users, holders, into more active ones to participate in DeFi, lending, stablecoin, issuance, and perp DEX.
Okay, great. And I guess our clarification is that in U2's case, the yield is earned in Bitcoin, but in Babylon's case, you would earn it in some other token, and what if you could convert it to Bitcoin if you wanted to?
Yes, correct. Because I think, like, you think about the entire crypto universe, half is Bitcoin, or like more than half is Bitcoin. The rest of crypto is another smaller half. I think for Bitcoin to extract the most value, it shouldn't be just within Bitcoin itself. You should try to get yield from the second half of it, to embrace the two halves of the crypto universe.
I see.
So, yeah.
Yeah, actually, I think Gabe brought up a really interesting point in that Bitcoiners really don't want to take a risk unless there's a high enough APY, like 3% or more. And that's kind of the industry-wide challenge, it seems, is that it's very hard to get a 3% plus APY. Like even with routing or channel leasing, statistically, you're not that likely to get 3+%, or like with Babylon, right now at least, staking, you're not going to make anywhere near that. And I feel like one of the major reasons for this is that there's a huge supply-demand imbalance in that there are tons of people, tens of thousands literally of Bitcoin that want to earn yield, but not enough economic activity to support that yield through fees, for example. And what do you see in the near future changing that? Like, is there some change that you anticipate in the market where like lending products or, well, I guess options can already generate yield that way, but yeah, what do you see in Bitcoin's near future that would improve yield?
I think the first thing is like increase the utilization rate of borrowing Bitcoin. I mean, there's a reason why when you deposit Bitcoin on like Aave or Morpho, you're getting like 0.04%. It's because no one actually borrows Bitcoin, and because when you borrow Bitcoin, what are you going to do with it, right? It's not like if you borrow ETH or something, you can just stake it or do looping strategies and stuff. So I think the first thing is start building products that increase demand for Bitcoin, increasing like Bitcoin utilization, like BTC utilization. An example could be like more Bitcoin denominated assets. Like wasn't the biggest fan of runes and all that, but like that's an example of if you want to get into now like the meta games of Bitcoin, like ordinals, runes, whatever, like you need BTC to interact with that. So I think increasing the demand to actually want to borrow it, I think is one thing. That's the first step, right? And I think once you get that up, then once deposit rates become like 3% or so, then that's for on-chain deposit rate. Because to be clear, if you deposit with like an institution right now, you get anywhere from like 3.5% to 4%. But then you have to KYC, do AML checks, onboarding. You need to give them like minimum $5 million, so it's not a retail product. But yeah, like we need to increase the need for Bitcoin. Like, what are you going to do with it on chain?
And by the way, do you have like insight into what the institutions that borrow at 3-4% use the Bitcoin for?
Oh, of course. Because I used to work at Galaxy, so I saw them do this like every day. But it's pretty simple. Like institutions love borrowing BTC and then they wrap it into WBTC, put it on Aave, borrow USDC, and then they lend it out to their counterparties. Because the big institutions, like some of their biggest clients are, funds that can't touch Aave. So even though the borrow rate on Aave for stables is like, we'll say like 5%, the institutions will lend that same USDC for like 8%. It's free money. It's like an infinite money glitch. So that's why Bitcoin lending is so big, in my opinion, because I think a lot of these big institutions that we all know like just do this same trade. But when institutions can use Aave, like all of them, that trade will close most likely.
I see. So yeah, I think that I understand Citrea's position of like getting off-chain DeFi back to on-chain. Like what you're describing to me right now is wrapped DeFi, and then you're trying to unwrap that, right?
Basically, yeah, just make it more accessible, right? I mean, these high yields do exist, but just to like a very small amount of people.
I see. Jesse.
For the yield to increase, we actually need to see, or from the Lightning Network, we need to see Bitcoin be accepted as payments more. Bitcoin provides, through the Lightning Network, really solid payment infrastructure to the point where, traditional payment processors would charge 3 to 4% with every time you swipe your card. I mean, happens in the U.S. and the payments don't actually show up for the merchant, until several days later, sometimes weeks. And it also comes with the risk that the money can be taken back. It's not a push system. It actually gets pulled from your bank account. And what Lightning represents is something completely different. So what you can actually do is, as a business, you can start receiving Bitcoin payments over the Lightning Network, and the cost to actually do that payment processing drops down to 0.25%. So this is over 10 times better just in the fees that you would pay as a business. And any of those fees that you would pay to actually start accepting Lightning payments at 0.25% would go directly to funding the supply side of the market, which is the supply side is looking for yield, and the demand side is businesses accepting Bitcoin payments. And one of the catalysts to look ahead is that the Lightning Network is now capable of actually dealing with stablecoins. So if businesses don't want to accept Bitcoin payments, they can accept stablecoin payments. And what the Taproot asset innovation enables is that a payment can begin as one currency and in flight change to another currency, usually a stablecoin, because businesses are comfortable with that and there's low volatility. So that would be a massive catalyst to increase the amount of Bitcoin payments that are flying around and supporting a yield market.
That makes a lot of sense merchants the channel leasing is for merchants basically, and so more merchant adoption number goes up, yield number goes up. Right?
Exactly.
Okay, that makes a lot of sense. All right, Fisher, sorry, I'm going to rehash the question just in case everybody probably forgot already. What do you envision changing in Bitcoin or around Bitcoin that would increase yields in the future?
Yes, I think the answer to Bitcoin yield increase, it lies on the altcoin universe side. Yeah, as Gabe mentioned earlier, like Aave and stuff. But Gabe approached that from borrow Bitcoin side. But I want to take in the opposite one, which is Bitcoin-backed lending, where you hold Bitcoin and borrow stable. Okay, so if you look at all the major lending protocols like Aave, Morpho, Euler, you can see the lending pool is usually twice or even 3x of the borrowing pool, which means there are much more people who are willing to lend than people who are willing to borrow. So if we can introduce Bitcoin as a borrowing asset to such protocols, they will welcome Bitcoin with widely open arm with very good interest rate. So I think this could be the next step a very concrete step for Bitcoin to increase its yield, because there is an interest arbitrage opportunity for Bitcoin. Yeah.
So the interest arbitrage, could you expand on that a little more? I don't think I fully understood, but you're saying people would be able to borrow Bitcoin? Stable.
No, borrow stable by using Bitcoin as a collateral.
Okay.
Yeah, not borrowing Bitcoin and use Bitcoin to do something else.
So kind of like what Galaxy did in Gabe's example, where they would borrow on Aave and then lend to people who have to pay a much higher rate.
Yeah, but I'm curious about what Gabe said, that institutions don't want to touch Aave?
No, there's many institutions that are maybe more TradFi centric, and family offices too, that they just don't want to touch Aave for protocol risk, and they would rather pay an additional 3% to face a public company that if anything happens, they can sue.
Like to have a off-chain counterparty with legal binding
Exactly.
for 3% premium.
Yeah, for sure.
Wow.
Yeah, that's the main reason. But in my view, I mean, this trade is going to close pretty soon, I think.
Why?
I mean, doesn't Aave have an institutional, it's called Aave Arc, something like that, right?
Maybe, yeah.
So, like, yeah.
But I heard it's a failed attempt.
It's not.
Aave Arc not going anywhere.
I heard that too.
Okay.
I see. So notably lacking from this conversation so far has been like this year's trend of Bitcoin treasury companies, or even Bitcoin treasury nations as well. And I think you've all been talking to such companies, and they must be showing some interest. But what are your opinions on Bitcoin treasury companies trying to generate yields? Like, is it worthwhile? Is it something they should do with a small portion, or is it something the market can't support? Like, just any thoughts would be appreciated. Yeah.
Well, I think I mentioned this yesterday in my talk at the Tokyo Bitcoin Base that the gap between the big treasury companies like Strategy, Metaplanet, and then the smaller guys, it's pretty big. Something I'm seeing is the smaller treasury companies, in order for them to be competitive and to still have a market presence, and when you have Michael Saylor and just talking, like it sucks up all the attention. So I think the smaller treasury companies are actually very interested in deploying some of their treasury into more like on-chain strategies to increase that total supply, right? But I think, yeah, it's going to take some time. It's not going to be like they're going to ape half of the treasury into like BTC DeFi. I think it's going to take some time, but definitely I called this like the treasury wave on my slide, and it's definitely coming. And the goal would be, of course, if Michael Saylor even puts a little bit of his treasury onto on-chain activity, it would be a huge win. But to get him, you have to like convince everyone else below first.
I see. Jesse?
Yeah, we've been having a lot of conversations with the Bitcoin treasury companies, and that was always the thesis, that Bitcoin treasury companies would start putting their Bitcoin to work on the Lightning Network and supporting Bitcoin payments. And I think the announcement value of that is incredible because, basically a Bitcoin treasury company needs to find ways to accumulate Bitcoin, and they're going to explore the entire realm of options to do that. Whether that be, high risk lending versus just like cold storage. And there's a whole range in between there. And, putting your Bitcoin to work on the Lightning Network, represents, a very low risk way to do that. And so we've received a lot of interest because the Bitcoin treasury companies, many of them, or most of them, are standing in the shadow of Strategy with this massive Bitcoin accumulation. So they have to find ways to stand out from the crowd. And what I've seen from Strategy is that they're not focused on Bitcoin as a payment system. I think Bitcoin Pizza Day, where we famously use Bitcoin to actually make payments. Well, Strategy proudly tweeted that they purchased this with dollars instead of with Bitcoin. And well, they bought a whole bunch of pizza, but nobody cares about that. I think people care about using Bitcoin as payments. What we didn't expect in these conversations is that the Bitcoin treasury companies have to use custodians. They have to get their entire board to agree to actually take self-custody. And that's what we've launched the product as a completely self-custody product. So primarily who we've onboarded already are the high net worth Bitcoiners with over 1 Bitcoin. And now we're working on the next phase of this where we're engaging with the custodians to actually make it possible for Bitcoin treasury companies to start using their Bitcoin to move Bitcoin forward as a payment system.
I guess as a side question that refers back to the earlier point on the demand side for these products, Bitcoin treasury companies, at least the ones that actually have a business other than holding Bitcoin, might have a unique advantage in that they can start accepting Bitcoin and kind of be part of the economic activity that supports the yield. Do you think that's fair?
It's a huge opportunity because if any of the Bitcoin treasury companies say we're going to start accepting Bitcoin payments or better yet, exclusively, you can only buy our service if you pay in Bitcoin. That really sets them apart as like dedicated to the movement. But also, if they put their Bitcoin to work to support their Bitcoin payment processing, they have yet another advantage that they're actually saving on payment processing and putting their Bitcoin to work to support broader infrastructure and a better network effect of Bitcoin payments.
Fisher, Babylon and Bitcoin treasury companies.
Yes, so actually we talked to quite a few Bitcoin treasury companies. There are two pieces of information I gathered from them were very common. First is everyone wants safe yield to accumulate more Bitcoin in a safe way. And second, most of them, they do this doing like centralized trading strategies against their Bitcoin, which is not safe at all. They don't have much on-chain and safe ways to accumulate Bitcoin. Yeah, so I think there's a huge opportunities there. And as both Gabe and Jesse mentioned, yeah, for a Bitcoin treasury company to stand out, they need to deploy more advanced Bitcoin treasury strategy than just buying and holding.
That makes sense. What are some challenges, I guess, that you see in getting, let's say, Bitcoin treasury companies to put their Bitcoin to work? Like, what have you seen, I guess is a better question. Maybe what are you seeing? Let's start with Fisher, actually.
Yeah. The biggest challenge for public companies is their unfamiliarity with Web3. Yeah, so they trust their custody a lot in terms of entering the Web3 space and earn yield in a Web3 way. Yeah, for example, one listed company is very interested in doing staking with Babylon, but they will only do this if their custody, which is Kraken, it's sign a three-party agreement. Yeah, so this is an example of, yeah, that's the difficulty.
Wouldn't the custodian themselves be interested in providing the service? Like,
yes, Kraken just deposited 10,000 Bitcoin last week to Babylon.
I see. Crazy.
I think as far as challenges, I've already touched on some of them. They have to use custodians, and beyond that, I think they also, for Bitcoin treasury companies, they're going to have to put their brands behind Bitcoin payments. And I don't think that that's going to be too much of a barrier, but it does have to be something that they'll have to understand, because we want to see Bitcoin payments. That's where the yield comes from. And they need to take proactive steps in order to make that occur in a meaningful way, to have a whole lot of yield for them to be able to extract.
Yeah, so challenges, I mean, I think, yeah, the custodian part is a big one. I think the familiarity with just managing and like on-chain positions is something that's been surprisingly they just don't really know. And the reason why that's a problem is because, if you look at like who, for the treasury companies, like the employees, right? There's no like native like DeFi trader that's like worked at, other crypto shops and stuff. It's mainly TradFi folks. So maybe there needs to be like a little hiring, like revamp for that world to exist, of just treasuries being like active on chain and managing positions. And I think another one is, so the treasury assets is BTC, right? Native BTC. But if you were to go use DeFi on like Bitcoin L2s, like you have to wrap the BTC. You have to interact with a bridge, right? So if you were interacting with Citrea, it would be your BitVM bridge. If you were interacting with any other sidechain, it's just a federation. I think there's like there's some legal questions there as well. It's like, can we interact with those entities to, like, can we face them actually to entrust them to swap our BTC in and out? And what are the risks of the bridge? I mean, BitVM for us, right? BitVM is an extremely complicated topic for most crypto people. It's very technical, and explaining that to like a TradFi person, it's a bit difficult sometimes. But yeah, I think the bridge security, right? Because I mean, if you're using BTC and DeFi, a lot of it's going to be like moving it around, right? Like it's hard to just keep it. I mean, you can stake on Babylon, of course, right? And you don't have to leave L1, but I do envision you're going to have to leave L1 for a lot of other things. So you have to interact with the bridge, and there's questions there for sure. So I think that was one hurdle that we kind of saw.
All right. We have 7 minutes left. Is this your guys' first time in Japan, or have you been here before?
Many times.
Many times?
First time in Japan.
Nice. You, Gabe?
I've been coming here every year for my entire life. My grandparents live in Sapporo, so I'm Japanese as well, like you. So.
Yeah. Well, with that in mind, like, is there anything in particular you are interested in the Japanese market, or like developments coming out of Japan, or like anything related to Japan? You know, might be some people in this conference working on similar ideas. Just anything related to Japan and your project? Any comment?
Well, Koji's going to lead the way.
Yeah, Koji. So Koji,
Take us to the homeland.
Yeah, he's moderating some other session probably right now. But oh no, there he is. But yeah, he's very involved with Lightning as well, Jesse.
For Japan, I just had the pleasure of listening to the Prime Minister speak about what is happening in Japan, and it did leave me with a sense of excitement because he was highlighting some of the population decline that is on the horizon, and talking about ways to strategize amidst that reality, and being tech forward on this front gave me a lot of hope for Japan. To prepare them to navigate the future. In addition to that, they're also taking steps to enable stablecoins. So a JPY stablecoin, and also paving the way for US dollar stablecoins. I think those are both massive steps. It's not Bitcoin directly, but it is a stepping stone to actually get you closer to accepting Bitcoin, where Bitcoin payments are ubiquitous, where we're seeing Bitcoin payments on a daily basis.
Yeah. So about Japan.
Or the Japanese market, or yeah.
First, I love Japanese food. Yeah, and a beautiful landscape here. But okay, back to business. I think what's unique for Japanese market is that Japanese people are diamond hands in terms of their Bitcoin. They will never want to lose control or give away possession of their Bitcoin. That perfectly aligns with Babylon's ethos, where we make Bitcoin productive in a trustless and non-custodial way, which means, yeah, when you make your Bitcoin work, it's your Bitcoin working for you, not your Bitcoin becoming someone else's Bitcoin working for someone else.
Okay,
Yeah.
I have
That's
two
perfect
questions
match.
actually
Okay.
that came from this very quick round. One thing that, in my personal opinion, I feel like most Japanese people don't self-custody currently. Like, a lot of people trust the exchanges because while Japanese exchanges have been victims of many hacks, they've always returned the money, basically. They've compensated their clients. What do you think is necessary to drive people towards self-custody? Like, what's something that would convince people who hold their coins on an exchange to start self-custodying their coins?
I think like the learning curve, right, where we're like at the beginning, and we have to actually, one thing I've learned, and I don't want to take up too much time, but so similar to your view, right, like a lot of my friends who are like 25, 26, they all have and my Japanese friends too, they have their BTC on exchange. They don't really know what self-custody is. The reason why my Japanese friends got into Bitcoin is because I sent it to them on like a Coinbase wallet or something. I know it's not the best, but I had that at the time. But that's what got them interested in Bitcoin, and then they started buying it. So I think there needs to be maybe a little more handheld like education on like, this is how you self-custody, this is why it's important. Maybe if Ledger or Trezor wants to do like a big campaign and just give out a bunch of free hardware wallets to students or something, like we need to start from zero and like educating people, or the Jade wallet, right? I've heard that's a good one. Yeah, I think we need to start with the level 1 education here.
Jesse?
Getting more self-custody is a challenge. I think you're completely right. I think that tools need to be so much easier, and that requires a lot of innovation and technical advancements. Even if there's tough regulation on centralized exchanges, it also kind of improves the development of decentralized exchanges and decentralized development. And that requires a whole lot of technical innovation as well as a lot of product design to make this very, very simple to use.
For sure.
Yeah, to me, I think I want to zoom into the definition of like exchange wallet or self-custody. Okay. To me, exchange wallet is definitely not safe. Exchange can take your Bitcoin away. Yeah. Or apply very strange KYC to stop you from withdrawing Bitcoin. But a professional custody service provider in Japan, such as Coda, okay, if you subscribe, you use Coda to custodize your Bitcoin, I think that is acceptable because not many people are technical enough to manage their private keys. So signing some legal agreement with a professional custody provider, I think that extent, I think it's fine.
Yeah. Do we all agree that self-custody is good for Bitcoin yield, or show of thumbs, good or no?
Yeah, it's good for yield, but like most likely on an L2, right? You're using like a web extension browser and whatever, right? So like some people don't view that as like the most secure self-custody. It is, right? But it's not like cold storage locked away.
Fair enough. And on a similar note, I think the topic of stablecoins came up a few times. Are stablecoins good for Bitcoin yield? And I guess for Bitcoin, honestly, I think there's a split opinion among Bitcoiners in particular that stablecoins are kind of the US dollar basically. It's a competitor. But do you think Bitcoin and stablecoins compete, or do they wait? Yeah. Go ahead.
No. A Bitcoin-backed stablecoin will be the best way for the world to have a universal currency that can fight against a US dollar-backed one. Yeah.
Interesting.
We have that.
What?
We have that.
You have that. All right. I think that's about time. Thank you so much for this interesting panel, and thank you all for listening. Thank you very much.
Thank you.
ありがとうございます。
Thank you very much to our speakers. Now, can I ask you all to come and stand in the middle of the stage just before you go so we can get a group photo by our official cameraman? Thank you very much. Another round of applause, please. ありがとうございました。